All right, so this is 23-2. And so we have two different parts to this. The first part is distribution of net income. So they give us some general information we need up here. And so they tell us Carpet World is a partnership owned by Sophie and Noah. General ledger and income statement information is given in our question assets. So prepare the distribution of net income. And so first we just need to know what our net income is. So I'm going to go ahead and plug that in here at the bottom. So 32,600. And then since they're both 50-50 partners, this is pretty easy. All we have to do is just divide that number by 2. And each of them will get that same amount. So for Sophie, 16,300, and the same thing for Noah. Okay, then we'll go on to our second step. So we still have that same information, and we also have that net income statement that we just prepared. So now what we have to do is use the balances from the information above to create our owner's equity statement. So some of this is just bringing down a lot of these numbers. So we're starting with Sophie. So her capital as of April 1st, they tell us, was 19,000. Then her share of the net income was what we just calculated. So that is 16,300. And withdrawals for Sophie was $1,000. And so here we're going to take 16,300 minus the 1,000 to get our net increase. So that will be 15,300. And then we will have to go ahead and add those two numbers together. So we then get $34,300, and then same type of thing for Noah. So Noah started out with 22,000. His share of the net income, if you remember, was the same as Sophie's because they are 50-50 partners. His withdrawal is 1,200. And so our net increase, 16,300 minus 1,200 would get us 15,100. And so we will then add the 15,100 to the 22,000. And so that is 37,100. And then we will add both the 34,000 and the 37,000 together to get our total owner's equity. So that is 71,400. And so now we have that done. You are ready for the On Your Own.